It's time now for the currency report. Let's check out the British pound. Big week of drama for Brexit. Boris Johnson, of course, suspending Parliament. It's going to come back a couple weeks before the Brexit deadline, but at the same time, that is causing quite the uproar in Britain. So, if you're a currency trader, how do you trade the British pound? Adam Budden, the chief currency analyst at ForexLive, joins us now to weigh in. Great to see you, Adam.
Hi, Greg.
All right, so there's never any shortage of Brexit drama, and it feels like the never-ending story. What does the currency market make of the pound these days?
You know, it's been an interesting week because the news has been negative, and one of the old adages in trading is that if something can't fall on bad news, it probably can't fall at all. And there's been a lot of bad news, but the pound has hung in there fairly well this week. And to me, that shows a market that's priced in a lot of bad news already and maybe primed for some kind of positive surprise.
Right, the positive surprise might be some sort of deal to get them out of the European Union. But I think the fear this week was that when Boris Johnson made this move, that upped the stakes for crashing out of the European Union. I guess all bets still on the table right now.
It is. I mean, this isn't going to be the final chapter. It's merely a chapter, and however it ends, the uncertainty isn't going to end in the UK. You know, he hasn't made this move to prorogue Parliament, and we went through this in Canada, and there's obviously a lot of outrage. But you've also had people within his party resign, and the numbers ultimately are dead against him. And in my view, there's no chance of a no-deal Brexit. Parliament will find a way to stop it, be it next week when Labour will try to pass laws to prevent a no-deal Brexit, or at the end of October. So that there's an outside chance, I think, next week that they can get it through and do something then. And I think you can see 3-5% rally in the pound because the market is extremely short the pound right now.
All right, on the broader, bigger global issues, nothing is bigger than the United States and China and their trade war. We're back in the optimism days. They seem to be softening their tone with each other. From an equity perspective, some money is moving into stocks. So what about from a currency perspective?
Yeah, I mean, it's this ebb and flow. We're sort of stuck in the range in stocks, and bonds and FX have been, tepid on these moves while kind of stocks get a little bit more excited. I look out maybe a year from now, and I just can't believe that this is going to be much better then. So, we're excited now about a phone call or a meeting, but is there a deal to be had here when all the actions of them have been even more aggressive and tariffs kick in on the weekend? So I think ultimately it ends in a negative sense, and you get this flight to safety, be it US dollars, Japanese yen, or Swiss francs, that escalates once again.
All right, the Canadian dollar is not seen as one of those flight to safety currencies for the most part. And now the discussion in Canada has turned to the Bank of Canada having to prepare us for a rate cut because of the global trade war. What do you think the chances are of that at the end of October, that polarized would actually go that far?
I think there's a chance even next week. I mean, the market's looking at about 15% chance next week. And one of the most powerful tools the central bank has is surprise. And this is Paulus's only chance to deliver a surprise, and he hasn't been against that kind of thing in the past. If you look at the Canadian yield curve, I mean, we talk about the yield curve in the U.S. all the time. 2s, 10s there are inverted by 1 basis point. Here it's 21 basis points, and that entire move has come since the last Bank of Canada meeting in mid-July. So, there's a good case here to cut rates preemptively. And you'd see the Canadian dollar fall on that kind of thing, but it may be good for Canadian growth down the line. So if they've decided they're going to do it in October anyways, which I think they are, you might as well do it now. And then I think you get a little bit more juice out of it. So the risks are certainly to the downside for the loonie in the week ahead.
Very interesting. We'll see if they pull that Band-Aid off next Wednesday and give us a bit of a surprise. It's interesting, though, with the Bank of Canada that they were singing the same tune that the Fed seemed to be singing in Western central banks about a year ago, that they wanted to get back home. They wanted to get back to normal. I guess at this point of the expansion, given what's happening right now, do you give up on that completely? I mean, did we top out on interest rate hikes for the Western Hemisphere?
I mean, maybe forever, right? It might be 20 years before you even get back to these levels because central banks just haven't been able to see any inflation come through. They predicted it again and again. And it's disappointing because this rhetoric, it really rings hollow right now, and that they were talked about data dependence, and they talked about getting home and this sort of thing. And then we get a little bit of volatility in trade and in equity markets and bonds, and they hit the panic button. So there is obviously this case to to stay, and that's maybe what they should do. But I think if you're in markets, you're in the business of finding what will happen. And time again, the moment we hit a bump on the road, they hit the panic button. So that's probably what's going to happen again.
If we're stuck here at these low rates, as you said, perhaps for years, if not decades, what does the global financial system look like? Are the rules rewritten then about how, currency traders approach their craft, how equity traders approach their craft?
Yeah, that's something to really start thinking about right now, because money chases yield in general. But if everyone's zeroed out, and we're essentially there right now because the differences are so small that it's not worth chasing that carry. Instead, you look for growth, you look for stability, political stability, and you look for security. And I think Canada offers a lot of those things, North America in general as well. I think we might start to see that in the year ahead as money starts to chase equities more and that kind of yield and the growth that you're getting from that. So those are going to be the dominant flows probably 3-5 years out, replacing yield a lot, because I don't think we get off this floor for a long time.
Always great to get your insights, Adam.
Thanks, Greg.
That was Adam Button, Chief Currency Analyst at ForexLive.